All right, guys, welcome to the end of day recap with Christian Fromhertz, Tribeca Trade Group, and it is Tuesday, October 3rd. Look, I didn't even have to change the themes of the day in my spreadsheet up here. Weak breath and rates in the dollar higher again, although the dollar didn't hear too much about the dollar today, more so about rates. Risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. So I could talk about bonds for 15-20 minutes. I'm not going to do that in this video because I have you could just go to my previous YouTube video that talks about bond levels. Do I think that we have possibly reached a capitulation, a short-term capitulation? It's possible. For me, when I look at my indicator and using volume at price, using the TTG MarketWebs, yes, we've come out and taken out another one of those red lines. Most of you who are a regular viewer of my videos know that I talk about those red lines quite a bit. Those are virgin point of control. This is going back, I think, about 10 years, right? So yes, I do believe that the market has memory to it from all the way back in here, and I personally am expecting a bounce. Now, do I have a long bond trade on here? No, I don't, because it's really tough to make a ton of money in a long bond trade because usually they just don't move that much. I usually, because I talk a lot about bonds, but I don't trade, bonds that much. I basically look for an understanding of what's going on in the bond market, and then I use that to basically make a trade or two, and what is going on in equities. So, first of all, the market has a lot of things, when I just talk about the market, it's equities. There's a lot of bad things there's a lot of negative things going on right now. And it's not just bond yields. So just because bonds bounce, that doesn't mean that, A equals, A happens and then B happens, right? It doesn't mean that equities are going to make a low and we're going to go higher. Now, what I want to talk about is what happened last October. Did it mark a low last October? It did, but the market has a way of kind of fooling us. Sometimes when we get complacent and we think, okay, this needs to happen first and then this. So you always have to kind of be on guard for new relationships. But yes, when we made a low, this was back on 1017 in bonds, and then we begin to march higher. So that was one of the reasons, right? What about the dollar last year, right? The dollar made a high earlier, 919, right? It made a high in here, or I'm on the weekly chart, right? So things don't have to line up. So that high in the dollar happened before equities actually turned around. So you have to be kind of careful of that, because yes, both bonds and the dollar are headwinds for equities, but just because they start to kind of go off the highs, it could possibly take that pressure off of equities, but you may not get a turnaround right then, because we didn't turn around till this really happened, right? Until a couple red bars happened. So the main thing here is to kind of be patient. And yes, so I think that that could be a low. Also TLT, which was the other line that I outlined on the daily chart, right, also took out one of these virgin point of controls. And then I will stop talking about bonds, I promise, and we'll talk about what I see in the equity charts. But I got the wrong chart here. I need the daily chart. There it is, right there. So that's also a level taken out. Again, notice what happened back in here, right? We made the low on 1021. Right now, so the question that I have, because this was a big thing last year, right? And I remember having conversations with people when the market was going down last year, and everybody was telling me that there needed to be capitulation last year. Remember that? Remember, people were all over the place saying that the VIX had to go to a 40 before we put in a bottom last year, right? And that never happened. There's a lot of things that people were looking for last year that never happened. I think we got a high last year around in the lower 30s, much higher than where we are now. But we never got to a VIX of 40, which is all the way up here, right? So don't always listen to things that people tell you. Just as I'm telling you in this video, do your own analysis, do your own research. But going back to what this looked like when we turned, right? We never really had a capitulation day. We did reverse right on that version point of control. Now, now there was another one below here, but we did not take it out. But but there wasn't anything particular other than that we started the day lower and we climbed and we went higher. Remember the following day, look at what we did. Look at how messy this was, right? Because if you thought that we made a low, right, back on 10/13, right, of last year, and then you got to 10/14 and we almost had, we almost gave back all of those gains, right? We started here, we try to go higher, and then we sold off on the absolute lows. So if you were thinking that day back on, what day was it again? I'm sorry, 10/13. Like if you were feeling all confident about that, I could tell you the following day after that, you weren't feeling that confident anymore. And now what really gave a head fake was the following day we ended up higher, right? And then after then we began to build. So there's a couple lessons here. And let me just, so the couple lessons are, number one, we don't have to have a capitulation day for the market to reverse. Number two, right, you may not get the all clear sign that things are going to be better. It can be a process, right? And we could kind of build off of that, and you're going to begin to see things kind of change. One of those things that has to change is the breadth, right? And I think if I haven't shown this, sorry, I was on another broadcast earlier, but we're not seeing like those washout breath days. Are we seeing some ugly, nasty breath where we've got a lot more decliners than advancers? Absolutely, but it's more of a wearing down type process. We're not seeing an extreme. Nor did, if you go back to last year, we saw an extreme day back on 9/13, but we didn't put in that bottom until all the way in here, right? And so we had a number of those bad breath days before things straightened out. So it's a process, and at least that's how it was last year to me, because as you could see, that very next day after we made a low, we almost gave it all back. So I would be the takeaway from here, what I'm trying to explain is to be patient with this. Yes, I am looking for this version point of control to be taken out, 42.47, similar, and then looking for a reaction similar like this. But if we don't hold that, then you have to begin to put your eyes further down, right? And we'll want to see a change, like we did on that day. That was at least a hint that something was going on that day. But we are getting oversold, just like in the bonds. The last time I'll mention bonds is that they are oversold. I think the RSI on TLT is at 20. Right now, the S&P, the RSI is 27. Another thing from last week too that stood out to me was the NIMO and the NAMO, the McClellan oscillator. We never really got to an extreme oversold, right? We were talking about how we kind of crept into oversold, but we never got an extreme oversold reading last week in the McClellan oscillator. And and then once the market bounced a little bit last week, that went back to neutral. So I would watch the 42.47 level and what happens around there. And then also I would note what's going on with not so much IWM, which continues to act very weak, right? Broke through those lows, no problem, of last week. Qs are showing just a tiny bit of relative strength. Even though they were down 1 3/4% today, they have not taken out the lows from last week. Now, what I would want for confirmation purposes is for price to get it back above 359.78 and to do it on decent breadth, right? So that's something that is something to watch. And also on the 1 hour chart, which I generally look for hints, watch to see if we could stay above 354.88. If that does not hold, then you could point your eyes down here to 350, and we know that that we are not through with the downside reaction. But yeah, I mean, right now we're at October. We're at October 3rd, and I think at this point, like everybody's heard on Twitter that that the seasonality does improve this month, but it could happen towards the end of it could happen in the middle of the month, and thereafter to the end. So you just kind of have to try to be patient with this market and not get too overly exposed. That's it for me for today. Have a great day, everybody, and see you tomorrow.